just going to talk a little bit about
No, this
some
is
of
a
these.
snippet.
A snippet, okay.
This will be a snippet.
I got a text from
Show's
my
next.
I got a text from my son and daughter, and they're both like, Dad, we want to get into the next FOMO stock, the Rivian stock out of Bloomington Normal here, and it's up over 100%. What are you doing, Dad? Are you in it? And what am I supposed to say, Mike?
Well,
how are
it's ironic
IPOs?
you said, because I had a friend reached out to me before Rivian went public, and I told him the facts. I said, look at the data on IPOs, long-term returns aren't good. I don't think my job is not short-term speculation. I can't help people in that, and the crystal ball is always cloudy. And it's easy after it's gone up to say, hey, told you so, should have done it. But our producer wanted to buy some too, and he didn't get any because he had to trade in at Schwab, I think, and it popped. What did it? It started at 70 or something, and it opened at 120 or 130
so he
or
couldn't
something.
even get into it.
So you couldn't even get into that. So, it's great. It's wonderful. It's moving up long term. The jury's still. What's the market cap on it now?
138 billion.
And it opened at a $70 billion market cap, so it went up $60 billion in a week.
Right. People are FOMOing in.
And they've built 176 cars.
Yeah, and we want.
Maybe
by
I'll
the
be
way,
wrong.
We want Rivian to do well.
Sure
we
do.
think we want them to be
Great
another
asset to Central Illinois.
Exactly, Central Illinois, American
Right.
producing car. But we have this book here, William Bernstein, Deep Risk. And what's the difference between deep risk, Mike, and shallow risk?
I think it's a great concept that he put forth. The deep risk, your money can go to zero. Mm-hmm. Shallow risk, it can go up and down. So, the good example there is buying individual stock. Deep risk, you can go to zero. And shallow risk, you can lose a lot of money and be down 50% if you have a 100% equity portfolio. But long term, you're still going to do okay.
Yeah, and I think it's so exciting to get into Rivian, right? Like, hey, I was the first investor in, and so there's emotions behind that. And I think we talk a lot about the emotional aspects and how you can get in trouble with your emotions.
Overconfidence, recency bias. Recency bias is probably what we're showing here, right?
Yeah. How much more can Rivian actually go up, buddy?
FOMO. You were the one that told me before we did our notes, right? FOMO.
Yeah.
Fear of missing out.
Well, so I guess the takeaway here, and this is really all we wanted to say,
right.
the takeaway
just a snippet.
Just a short show is that, we want Rivian to do well. We hope it keeps going up, but it's just so richly valued, folks. It's just so richly valued. It's hard to get in now at this level.
Sure.
And there's probably a better way to invest.
Well, I think
right?
the better moral to the whole story with individual stocks is if you have to have that excitement and you want to try and feel like you can do some of this, use a little bit of your money. Don't use a lot.
Well, very good, Mike. Some words of wisdom there for our viewers. This is the Money Team. We're out.